Hello, and welcome to the Mortgage Porter Weekly. I'm Rhonda Porter, mortgage advisor in the greater Seattle area, and this update is for the week of July 13th, 2026. Housing stayed front and center last week. Cotality's latest home price insights report shows that home prices rose 0.6% from April to May and are up 0.8% year over year, with another stronger seasonal trend of 1.6% over the past 3 months. Looking ahead, Cotality is forecasting another 4.8% appreciation over the next year. To put that in perspective, a $500,000 home appreciating 5%, so just over 4.8, gains around 25,000 in value over a year, and that's the long game of homeownership. Nationally, existing home sales slipped 2.4% from May to June to a seasonally adjusted annual rate of 4.09 million homes, though that's still nearly 3% higher than a year ago. NAR's chief economist Lawrence Young points to this as being just a sign of just how sensitive buyers remain to interest rates and affordability right now. Here at home, our local NMLS numbers tell a similar story. In King County, closed sales came in at 2,183 for June, down 6.4% from a year ago, while the median sales price sat at 889,000, up slightly from May, but down about 2.7% from last June. Active listings jumped nearly 17% year over year, giving buyers more to choose from than what they've had in a long while. Inventory has improved compared to last year, but we're still undersupplied by historical standards. So if buyer demand picks up, we could see renewed upward pressure on home prices. The bipartisan 21st Century Road to Housing Act officially became law this past Saturday. President Trump didn't sign it, but he didn't veto it either. So under the Constitution, it became law automatically once the 10-day window passed. It'll take some time to see exactly how this shapes things for Washington homeowners and buyers, but I'll keep you posted as the impacts become more clear. I've got more details on my blog if you want to learn more. And finally, oil prices moved higher last week as tensions between the U.S. and Iran have escalated. And it's definitely a trend that we have to keep our eye on as it impacts mortgage rates. And as always, we hope that this ends soon. Now let's talk mortgage rates. As of last Friday, July 11th, the Optimal Blue Index put the average 30-year fixed at 6.511%. This is a touch higher than what I shared with you last week. And a quick reminder, this index reflects roughly 35% of mortgage transactions nationwide from lenders who use Optimal Blue when they go in to lock in an interest rate. And so this is not a rate quote. We don't know how these rates are being priced, if they're paying points or no points, or what the credit scores, loan to value, or other factors are that play into pricing out an interest rate. So if you would like to see a detailed rate quote based off of your personal financial scenario, please reach out to me or visit my blog. I'm happy to help you. This week is a busy one on the data front. CPI, Consumer Price Index, comes out tomorrow, and with the Strait of Hormuz and the Iran conflict keeping oil prices in the headlines, it'll be interesting to see how the markets digest it. PPI, Producer Price Index, follows on Wednesday as another read on inflation, and the new Fed Chair Kevin Warsh testifies before Congress both Tuesday and Wednesday, and that should give us an insight on where the Fed is at with the Fed funds rate and where the rate may be headed. Right now, CME's FedWatch tool has the odds at 46%, for a rate hike at the Fed's meeting in 2 weeks on the 29th. And it's just before 11 a.m. Pacific time as I write this, and mortgage-backed securities are down around 28 basis points. I received an alert to lock from MBS Highway, which is the one of the services I subscribe to watch mortgage-backed securities and help advise my clients. July has been a bit rough for mortgage rates, as you can see on this chart with all the red candlesticks, indicating rates deteriorating. So, of course, we hope this turns around soon. This week's spotlight is on the rent versus buy comparison. This is a tool that factors in your rent, a purchase scenario, and home appreciation over time, as well as paying down your mortgage balance as well, so an amortization benefit to show you exactly how long you need to stay in a home to potentially break even. And of course, it's all estimates and forecasts. And I recently walked through this with first-time home buyers that I helped in Puyallup, and I shared their case study on my blog. And although it does show a cash flow difference of $51,000, based on this case and what they were paying in rent, the potential net gain is about $198,000 or just under $200,000 after factoring in that cash flow difference. So I'm a big believer in providing as much information as possible to help people make informed decisions about their mortgage. And if you'd like to see this tool or any others that I use or have available for you, just reach out through my website or contact me directly. I have a link at the bottom of the footer of my website at mortgageporter.com. I hope you have a great week. If you or anyone you know are considering buying, refinancing, a reverse mortgage, or remodeling anywhere in Washington State, even if it's months away, I'm happy to talk with you and help you start creating a plan. Take care. I hope you have a great week. Bye-bye.